When I say the losers have become sources of funds, we have to talk about where those funds are going. Where are the remaining bull markets? Remember, 40% of the S&P was up at the beginning of the day. That wasn't the case at the end of the day. And in a bad tape like this, the stocks that work stick out like sore thumbs. Let's go down my sore thumb stock list. Little cinema verite. Okay. First, if a company mines or extracts minerals, then as long as it's not a SPAC play like MP Materials, its stock has been roaring, even if it got hit this afternoon. Alcoa's going from $5 to $41 in just over a year. Their aluminum's used to make cars lighter. Freeport-McMoran surged from $9 to $42 in that same period. Their copper's used to build everything, especially, though, electric vehicles, which can use up to $200 of copper per car. So it's a good time to be in the copper business. There's not enough of it. These raw materials companies are second nature to an old guy like me. I remember when Phelps Dodge that used to be the biggest copper company. But younger investors probably haven't spent much time thinking about all the things that aluminum or copper go into. Look, I don't blame them. If you came of age after the financial crisis, you had no reason to think about Alcoa or Freeport whatsoever. And a decade of stagnation. Who would ever worry about them? But the economy's booming now. And this is what works during a boom. And you have to understand that a boom drives you out of some stocks and into others, even though they're boring. And same goes for the oils. I don't care for the oil industry in general, but there are two that I'm willing to recommend. If you want a big dividend, I trust Chevron more than any other. If you want growth, I like Pioneer Natural Resources. I know the management well. They're terrific at finding oil. I can't blame anyone who wants to avoid fossil fuels on principle, but you have to know why their stocks are roaring here. You need to see that these are demand-driven, meaning their customers are desperate for their products. Then there are the infrastructure stocks, obviously, because we have an infrastructure bill. If you own anything steel, meaning anything that can be used to make steel or move steel or dig holes and take minerals out of the ground, then you got a winner. Caterpillar's the best of the bunch. A decade ago, they bought a mining company, Bucyrus, and that acquisition's finally paid off. It's mining equipment. Plus, they make everything you need to build new highways. Deere has lots of agricultural exposure, but its machines can dig some terrific holes and move a lot of dirt. United Rentals has a ton of machines. They're renting them, hence the name. Next up is a company that builds houses. It's stocks that can find buyers, whatever you say. I mean, we can find them for you, okay? And that's the demand from housing that has to do with moving from the cities, and it's off the charts. Between low interest rates and the COVID-driven exodus from the cities, you aren't going to be able to find a nice house that doesn't have multiple bidders, meaning you have to pay more for it than you thought. So you just borrow the money, which, of course, is cheap because the Fed wants to keep the economy moving and create jobs. And that means Lennar, it means Toll Brothers, it means D.R. Horton. They're all loved. And that love extends to anything related to home improvement and home furnishings, which all have amazing demand. Let's do Williams-Sonoma on the high end, Wayfair on the lower end. How about Lowe's and Home Depot, both of which are getting a boost from this excellent gardening season, by the way. Stanley Black & Decker, we had them on. Remember, they sell goods and tools that renovate. People don't like the quarters, up 10 points. Best Buy, yes. How about a home theater? All winners. If a company makes a consumer product and has a good enough brand name that it can raise prices to pass on rising costs, that's a winner, too. Think PepsiCo, think Coca-Cola, Procter & Gamble. And by the way, thanks to a weak dollar, it just hit a 10-week low. These are even more attractive because they're now more competitive overseas. Plus, they've got good buybacks and good dividends, so they get support on days like today.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.